as crypto is becoming more popular, obviously more investment from big companies coming in, Grayscale, Michael Saylors of the world. We have obviously a lot of problems and more regulations, and it's a good thing on one side because obviously people can still benefit from making decent gains in crypto, but also be protected in a way. And we had the Ripple famous XRP versus SEC battle that is going on for probably I don't know, 2-3 years now at least, and we are closer to the end. It was filed in 2020 because of that, because of securities, because of not being compliant, and XRP Ripple is fighting back, and we'll see when it goes, when it's gonna finish and what's gonna happen. So far it's still raging on, and we just had a brand new one here with none other than Coinbase, which is I think the -- exchange in the world. I think Binance is overcoming it recently, or trying to, it's got more volume I think recently, but we have the same thing now with Coinbase, where US Securities and Exchange Commission is investigating them on suspicion that it allowed US people to trade unregistered securities. SEC was alleging that 7 of the cryptocurrencies listed on Coinbase were securities. In a separate insider trading case against the former Coinbase employee, a few days prior, the SEC had named 9 cryptocurrencies listed on Coinbase as securities. So it's going to be more and more stuff coming out like this. They obviously, SEC has very vague rules on defining how cryptocurrencies might be deemed securities, so they're trying their best obviously to attack anyone they find viable, and just try to give them penalties and do something, but they can't even decide very clearly what they deem as securities and what they don't deem as a security. And I found this article here sort of explaining this kind of stuff, but obviously, as usual, as I said, the fundraise transaction is a security if it's an investment of money in a common enterprise with an expectation of profit. So that's very gray area as well for SEC, and for people to be able to find out, because obviously in the future, if you invest in another XRP or have some money in Coinbase and they get into trouble, you might get into trouble as well. And there are some solutions that apparently SEC can't do anything about it, at least for now, where if you create a network that is truly decentralized, meaning that the instant the network goes live, it is in complete dominion and control of the network's node operators. So follow the example set by Satoshi, so something like Bitcoin, where there is no one that controls it. It's a truly decentralized network. That's why it's so popular. That's why it became number one network, and it still is. And because of that, people can have more trust, and they can really have something decentralized instead of banks and all those centralized exchanges. And here as well, the examples: as holders of equity non-profit corporation, shareholders can be rewarded for creating, seeding, and strengthening the network, the same as proof of work on Bitcoin network. The corporation may mine the coin, the corporation that created the blockchain, just like anyone else, but being creators, they have an early advantage in accumulating the cryptocurrency. But remember, this does not give the corporation any control. The network should remain decentralized to avoid being scrutinized. So since the digital assets being mined by the corporation becomes its property, they are free to distribute it to the shareholders in any way the board and bylaws allow. And the best way to distribute it is by dividends mechanism, and you've got all the more informations here. But I just wanted to touch on the platform that I actually covered in February, so about 5 months ago, which is actually built because of these reasons, because of that. And as you might recall, this is a self-hosted layer 2 wallet and decentralized exchange on layer 2, providing you services to make Bitcoin a DeFi coin where you can use all those fancy things with smart contracts and all that stuff while still maintaining Bitcoin as your asset. Portal is building the DeFi on top of Bitcoin blockchain to offer that range of DeFi services and still maintaining anonymity, so users can obviously participate in stuff like staking, lending without giving up control of their funds. So very advanced stuff and very good idea. Be protected. This is part of why we're all in this DeFi, this crypto world. As you can see, the owners, the all public team, they're building something solid. But this is why we are in this stuff, because on one hand obviously we want to make money, on the other hand we don't want people to control that money, and that's why those wallets that give us full access with our seed phrase, our keys, are such a revelation after, you know, after so many years, or the whole history of money basically is being controlled by someone else, unless, you know, I don't know, you've got some cash in your hand, maybe that's yours, you can spend it. But obviously now with cash being phased out, then obviously we have to look for other solutions, and wallets, you know, decentralized wallets, decentralized platforms are very good indeed to achieve that purpose. So this is it, guys. Have a look at Portal if you're interested. I'll put the link to the this material as well, this article below, but this is very interesting, and there's going to be whitelist whitelist here as well, the team investors. So take a look at it and let me know what you think. So thank you guys for watching.